Wall Street Raider. I've been talking about this game a ton, so I feel like it's about time I start implementing what I've learned in this, also with finance when it comes to, Wall Street Raider, which is a little bit different from Speculator because you actually control the companies you get. So I'm going to play with 5 people, going to do 1 person, and I'm going to do Goodman, like for Goldman Sachs, but it's good. Found it pretty funny. And so basically, yeah, we're going to start with $1,000, which is in the millions, so that's $1 billion, which is very, very unrealistic in my opinion. But yes, I got the new update, which lets you do ETFs and lets you get extra commissions and stuff. But today, I'm going to be doing my specialty, which I ended up learning from a guy in the subreddit. On the subreddit, what they do is they actually have basically on the subreddit they have strategies. So I started implementing a strategy that they had, and I really, really think, in my opinion, it's probably the best strategy ever. And I'll link it up soon, and everything should be okay, and it should be good. So we're gonna start off with a bank, which is really, really good because I play this game a ton. It's at a moderate level typically when it's at 8%. So it's in the low level. So this is usually whenever I do consumer mortgages. So yeah, we're gonna go asset allocation, and we're gonna set. This is pretty important for banks. You can set prime mortgages, subprimes, consumer loans, bonds. You can also do much more than banks in this game, but I specialize especially in banks. This is usually whenever the prime rate's high, so I'm gonna make this 0 because I want to be able to get a capital gain whenever they're high. But right now I can't get anything. I usually set this for 30%, especially when the prime rate's low, because apparently there's less defaults if it's at a higher percent, so it's pretty helpful. Consumer loans and cash equivalents just for liquidity. That way our customers can cash out of the bank. So I usually like to sell high growth rate. This doesn't really matter as much. It means that more and more people will deposit and get these two. Demand deposits are actually your most important type of deposit in the game when it comes to banking, because it means that basically they're going to be cashing out often. And when it comes to your CDs, these are typically longer term. The problem is you pay interest on the CDs and you don't pay interest on the demand deposits. So you really, really have to play your money smart. I'm doing mortgages and consumer loans. And then once the prime rate starts to hit around 8, that's when I start implementing this guy's strategy. And I start implementing government bonds into my portfolio. Yep, so it's almost time. It's up. But like honestly, and it also helps to have business loans too. Like you can set up this. These are but business loans too. Bonds, Corp, and Gov. So you can specifically go over here and you can go to buy and sell. You can buy business loans from banks. A grades are pretty good. I typically stop around the B, unless I want to have like good interest. But typically I buy it whenever prime rates are low for Ds, because I figured out that they have lesser default rates, so that's not bad. But yeah, I'm just gonna specifically wait until it's 8 at the highest. This is actually when I stop, again, the consumer loans, because I like to have liquidity. So now it's gonna start building up my cash equivalents, which is nice. Yeah, whatever. So yeah, we are Iron Capital Company. EPS is estimated 13 cents. Financial Goldman. It basically says like a bunch of important things. Reasonably competent, we're good. It's very, very important to see. Is basically this is the most important thing right here, especially the neutral. So they don't know what they're gonna do at the moment, which I hate this word neutral, because I cannot predict whether or not they're gonna make money more expensive or cheap. So I can't tell whether or not the prime rate's gonna go up. I have to kind of do technical and not. This is what I do for my technicals. Is I look at this. This is like the prime determinant and the operating band. The operating band is based on 0.5, its basis points. So like, yeah, this is below the prime rate. So I think that might mean they might lower their prime rate. And like this is way below. Makes more sense that you would make more money on your long bonds than your short bonds. So the government bond yield is not inverted. Inverted is when it's the complete opposite, when the short bonds actually pay more than the long. And typically that means that things are either going to be bad in cases, but in this case, no, not in this case, but in cases, it can be good because it means that they're going to increase the prime rate. There's a lot of hype around the prime rate. So I think there's quite a bit of hype around the prime rate, especially because they just raised it. So my analysis was pretty correct, I guess. So now this is when I typically do government bonds, but I'm going to be a little bit cocky and specifically wait until they raise it to probably 9 or 8.5. But like it's going all over the place. It's a short. I think the short's a bigger determinant whenever it comes to this stuff. Yeah. So they raised it a little bit. It's been all over the place. Yeah, when it comes to technicals, you can do like your support and your resistance. So they don't want it to go above 8. If it goes above 8, that's a breakout. Whenever it goes down. So this is kind of like the support right now. If it breaks the support, it's in trouble. Yeah, but I'm going to start doing a lot of hedging in this game too. So just to lower my risk. It makes more sense whenever I do it in physical. Yeah. Taking a bit of a hit. But I feel like we're going to do alright. Typically just wait until it's something. I love it when the prime rate's at like 10, because then that's when you get good ideas. Okay, it's a good time right now to start switching over to government debt. So I usually do 89%. Most of my portfolio is going to be in government bonds now, and corporate debt. So now we're basically going to go over to there, buy and sell. I'm going to buy up a good old bank loan from other banks, because we're going to get a good return off this. Yeah, so I got good returns off this. I'm going to buy one B, a triple B. And this looks good. So yeah, we picked up a bunch. Why not pick an R? So yeah. I'm just going to pick it up until it stops saying, hey, you can pick up loans. There we go. Basically says stop that. And then you can freeze and unfreeze the loan. So if they're typically below investment grade, I typically freeze them. So this is investment grade. So if it goes into BB, I usually freeze. And B and etc. Just so that way they cannot take any more credit out. And so they're almost forced to pay off the debt. Yeah. The thing that sucks is we're starting off our loans at face value, these two, like the consumers. But we're taking out a lot of government bonds, and so when the prime rate does decide to drop back down to like 6 or so, or even 5 and 4 in some cases, I'm going to make a decent capital gain. And then we rinse and repeat the strategy. So we go back in at 6% or below, and we basically start doing consumer loans, and then we rinse and repeat the strategy. And I could also do some beat the earnings estimate. We actually lost money that quarter, sadly. But yeah, I could also start doing this, where I do this, and I can start buying out companies. I like this a lot more, because I can just literally just do min and max, and I can literally acquire a company right now. I can acquire... But like, yeah, I'm just saying, I would like to acquire Ameritrade. Only problem is they're owned by another company, so I'm going to take a small stake. 30%. But I would like to take over all of Ameritrade. But can't. But like, yeah, it's not bad. This strategy, you also want to be able to start buying companies when you're at around a high prime rate instead of a low. You just want to prioritize consumer loans only. Yep, so things are going pretty smoothly. Yeah, our bank is, a lot of investors don't like our bank at the moment. Like, we're way below book, I believe. Neutral to easing. There we go, there's some good news for us. So this is when we lock in long term, because basically they're going to be easing now. So I know basically that the long bond is bigger than the short. So I decide, okay, let's literally just use almost all of our cash towards long-term debt. If people cash out, they cash out. It's no big deal. we got a ton of government bonds, a little bit of business loans, and a little bit of Ameritrade stock. So we're going to do okay. So now I'm going to stop the asset allocation. That way we do not acquire bonds at low interest rates and actually have a capital loss. So basically we're just going to wait until it hits around 6 or 5, preferably around 6 because that's when they hit the low mark. We're around moderate interest rates right now. It usually stays around 8 to 6% typically most of the time. It barely ever hits 10, it barely ever hits 4. And it barely ever hits 20. It never really hits 20. It hits it only occasionally. Yep, so we got a nice little... A lot of people are actually going into us because our portfolio is worth a little bit more. Like if you see this, you can see our market value and our face value. When the market value is bigger than the face value, that's when you sell the bonds. So we're just going to hold on to them until they decline the rates a little bit more. But yeah, we're getting basically 7%, 5% of our money. Yeah, that's basically what I do in Speculator too, is I also have the ability where I see, hey, prime rate might be increasing. Let's go ahead and stock up on some long bonds. So they're at 7% right now, so we made a slight capital gain. We're going to wait until they fall a little bit more. Yeah, so like if you see that the prime rate and the long bond rate and the short bond rate, they all have to do with the prime rate. So prime rate goes up, these typically both go up. And this goes up, or this goes down, these two go down. Yeah, and the only thing that sucks about banks is they can't buy like oil contracts and they can't buy physical oil. So I typically do it my own self. I could theoretically, what I could do is I could short the oil right now. But yeah, that's just going to wrap it up for this episode. Thank you guys for watching, and I hope you guys enjoyed my first episode of this new series I'm going to implement.